Thanks for tuning in to Thoughts for Tuesday, hosted by Bates Communications, a podcast series about business trends and leadership insights from the experts.
Hi everyone, I'm Suzanne Bates, and today I'm sitting down with Jack Roche, CEO of The Hanover, a property and casualty insurer. The Hanover is a fast-growing, specialized mid-market insurer that offers coverage for the things you and I own, like homes and cars and boats and other property. They're also at the forefront of a transformation in the industry. And today we're going to learn why that's happening and what it means not only to the industry, but to all of us. Prior to being named CEO, Jack ran Hanover's biggest line of business and was part of a 10-year plan to launch this transformation. So today I'm really looking forward to talking with Jack about how you drive transformation in an industry not exactly known for its appetite for change, how you differentiate yourself in a crowded marketplace, and about the advantages and disadvantages of rising through the ranks to become a chief executive officer. Jack, welcome. It's great to be here at the Hanover in Worcester. Thank you for having us.
Thanks, Suzanne, and I'm looking forward to our discussion.
You know, I always like to start at the beginning, and by that I mean before you became CEO, long before you became CEO. Where did you grow up? What did you want to be, and what were you good at?
Well, ironically, I grew up in Hartford, Connecticut, which is kind of the home base of many of the big insurers. And the last thing I wanted to do is to grow up and get into insurance. But I grew up in Vernon, Connecticut, just outside of Hartford. My father worked for Pratt Whitney Aircraft, and he was an engineer. And my mom worked for Aetna. She was an executive admin for many of the top executives there. And my aspiration, frankly, growing up was to kind of follow down my father's footsteps and look at the engineering field.
So what happened?
Well, as I got closer to going off to college, I actually was enrolled in a university in a ceramic engineering program in upstate New York. And unfortunately, my father developed brain cancer. And so with consultation with his doctors and my mom, we decided it was better to stay closer, and that drew me to the University of Connecticut instead of going to upstate New York. And after about a year at UConn, I got attracted more to the business side than the engineering side.
That must have been a tough time, though. You lost your dad.
Yeah, it was definitely a difficult experience for me and my family. But you grow up fast when those kind of life situations come together. So. I reflect back at it as a time where, it probably helped me get serious about what I wanted to do and where I wanted to go, and not just have fun at school. Was
your mom an influence in your going into the industry?
She was. Once I started heading down a business path, she would often, share with me some of the experiences that she was seeing inside the industry. A couple of times I got an opportunity to come in and visit with folks that she was working for, chief economist, the treasurer. So I got a chance to at least understand what insurance was and maybe demystify it a little bit. But I was still pretty steadfast in doing something else. And as time went on, and when I got out of school, I spent a year in business sales in another industry. But I remember my mom saying to me, you really ought to give this insurance thing a try. It's so much about common sense and about interacting with people. I really think you'd be good at it.
So she thought you had a lot of common sense, apparently.
Yeah, I guess so.
So after college, what was your first job?
Well, I was a salesperson working for business machine sales, so the real glamorous role of selling copiers and at that time even some electronic typewriters, believe it or not. And I was fortunate in that I had some kind of house accounts, so I could kind of dive in and have some repeat sales, but I also had to get out there and knock on doors for a living. Average 45, 50 cold calls a day. And boy, that'll teach you a few things along the way, including how to deal with people, frankly. So I enjoyed that first year. but frankly knew that was not my calling.
So how did you get into the industry then?
Well, ironically, I saw an advertisement for a small company called Atlantic Mutual based out of New York, so not a Hartford-based insurer, and they described what they called their underwriting trainee program, and it had some appeal to it. The way they articulated the role of the underwriter in commercial lines sounded like you were going to be running your own business inside of a company, and so at the encouragement of my mom, she says, "Yeah, I told you you should go check out insurance," and I went through an interview process and was selected to join their underwriting trainee program.
So fast forward a few years and talking about your industry today, your customers, for people who don't understand the insurance industry, who don't work on the inside of it, your customers aren't the people who buy the insurance. They're the agencies that have those customer relationships and sell your products to people like me, right?
Right.
Yeah. So how do you get their attention? All those agencies out there, because there's lots and lots of them. How do you get their attention when you're not the giant insurance agency?
Yeah, it's a great question because there are over 35,000 independent insurance agents across the country. And fundamentally, we rebuilt this company, a 160-year-old company, on the premise that if you focused on a subset of those 35,000 agents that were really most focused on a quality value proposition, trying to deliver something less of a commodity and something more customized to the clients, both on the personal lines and the commercial lines side, that you could develop a different type of relationship than you could if you were trying to sell to the masses. And so what we built here at the Hanover was a more distinctive product set aimed at the agents that we felt were most qualified to distinguish themselves in the marketplace. And it's that proposition, frankly, that's created this company and the momentum that we've built.
So taking a step back for a minute, because you came here, 12 years ago or so, right?
Right.
Yeah. And the industry isn't known for change. It's not known for transformation, but somehow this group of leaders who got together here started thinking about what you were doing in a different way. Tell me about that.
Yes, the proposition that our prior CEO developed and attracted a lot of talent from across the industry was twofold. It was that the consolidation within our industry, not only on the carrier side, but in the distribution system, was going to create the need for more and more companies to be able to deal with a consolidated distribution system. And in our industry, on the carrier side, there were a dozen or so very large companies and then 600 plus smaller companies. And as specialization and pricing sophistication really started to take hold in our industry, essentially you could look back and say the industry lost its middle. There weren't very many mid-sized companies that could, frankly, keep the big guys honest. And could give them.
Why is that? Why?
Well, I think through acquisition.
Yeah.
I worked for another company that acquired the previous company I worked for, that acquired the previous company that I worked for. So when that happens, naturally, some of the good mid-sized companies get consolidated, but as we've seen in other industries, that doesn't always work out well, right? A lot of acquisitions are not accretive to the shareholder, and frankly, underwhelming to the employees that work for those bigger and larger companies. So that was part of the proposition. We believed that the independent agents increasingly would be looking for alternatives to the larger companies that would maybe be distribution agnostic, but also that there was an opportunity that we were of size that we could invest in new products and services and be able to build up our product set so we weren't going to be a small, irrelevant company. And then probably last but not least, our hope and expectation was that being mid-size, as change started to come upon the industry, we would be more agile than a company 6-7 times our size. And frankly, I believe that's what we're starting to show the industry, is that premise was spot on.
So that was different kind of thinking. And I wonder what it was that was special about the leadership here or the culture here that launched that. And you were a part of that because you were on the leadership team.
Well, I think vision matters. I think at the end of the day, this is a vision-based institution, and everyone that works here has clarity about what we're trying to accomplish and to some degree how they can make a contribution. As I came here from a much larger company, it wasn't hard for me to envision how I could make a personal impact. And I've worked for a number of companies, albeit consolidated over time, and I reflected as I looked at this company and I said, I'm not sure I really knew what the strategy was for many of those companies, other than making shareholders whole on their capital. So that was what was so attractive here, is that we were able to bring people from many of the better companies with a vision that was compelling, and shortly after people got here, they could start to see how quickly they could start making a contribution.
You know, our firm, and you know our company pretty well, has done quite a bit of research on leadership, and one of the things that we've learned about innovation as it ties to the things that we research is it requires people to have productive conflict. In other words, there has to be a debate going on to get to the best idea, which theoretically everybody understands, but in practice it can be either scary or people avoid it. So were there debates about this inside the company because you were bucking the trend?
Absolutely. Fundamental to our approach and our strategy was a concept that we called aggressive collaboration. And at times it got a bit aggressive because there was a lot of passion that came into this company and a lot of people that wanted to make a contribution. But it is an essential part of who we are today. We bring people into the organization and explain to them that while you'll have a primary role in whatever function or job that you have, but everybody in the company has a secondary role, and that is to make a contribution beyond that role. And one of the concepts that we had as we brought people together and we started to build those relationships so that we could even have the chance of collaborating, because people don't collaborate or push or challenge people they don't trust. So we had to get that base relationship in place. But once we did, one of the major tactics that we used in some of our key meetings was to make it more uncomfortable not to contribute than to contribute.
How'd you do that?
Literally through coaching and feedback, and it always starts with the CEO, but it also has to transcend down to the senior team, where people are honest with folks that, listen, you were either underprepared or you underparticipated in that meeting, and that doesn't work for us. We need folks to roll up their sleeves and tell us what they're concerned about, tell us what they're excited about, present an alternative point of view. So we try to create that conflict, that alternative view, and make sure that we're not drinking our own Kool-Aid.
So I assume you worked in companies where that wasn't happening. And going on that assumption, how does that kind of encouragement of debate and discussion and productive conflict, how does that change the culture of the company? And maybe more, how does that attract people, or not? How does that attract people into your sphere?
Yeah, I think particularly in a consolidating industry, unfortunately what happens is you get bigger and bigger, and it's actually easier to run the company in component parts. It's much harder to get that collaboration. It's much harder to get folks to contribute in a wide and broad way. And I actually have come to believe over time that a lot of the scale that's been created and the other trends that our industry are creating what I call deep and narrow specialists. And that makes it really hard to work across the team and create the kind of culture that we're trying to create here. Also, I think, big companies tend to be more bureaucratic. And it's harder to be a bureaucracy here when the layers aren't as significant. And frankly, the people we attracted to the firm are looking for a different experience. And I would suggest today that that's so powerful that if I wanted to create more of a top-down environment here, I would have a real hard time doing it. We're just too far down the road in our evolution to turn this into a top-down company.
So we talked about the fact that you rose through the ranks. You came here 12 years ago. You've been CEO for a year. Congratulations.
Thank you.
A very good time with a lot of growth and a lot of great things happening. What are the advantages and disadvantages of coming up through the ranks?
Well, clearly the advantages are back to those relationships. I came into this role at a time when we had a change with the prior CEO that had come in from outside of the industry. And so there was some insecurity that was building around that naturally. He did a lot of great things for the firm, but people are anxious when they are dealing with somebody that doesn't understand the industry we're in quite as much. And that's equally true for our investors. So one advantage I had is that I was a known commodity, that I had 31 years in the business. I had conducted myself in a way that was collaborative and consistent with our culture, and so that was a happy moment for a number of employees and broader stakeholders. But the biggest challenge that I'm still trying to address is that when you've been in this industry as long as I have, it's easy to be too insular in your thinking. And you have to find, especially when you come into this role, you have to find deliberate ways in which you challenge some of your own hypotheses and you get more outside inputs.
How are you doing that?
So I have spent a good portion of my time, frankly, getting out to some of the outside stakeholders. Spent a lot of time with investors, understanding their perspective. I had done some of that prior coming into the role, but needed to do more of that. I spent a lot of time with our biggest distributors, our reinsurers. I've created a bit of a CEO network with folks that I feel most comfortable connecting with. But I've had to put a real deliberate process in place to make sure that my time allocation isn't running the business and trying to just get us to the next level of performance, but to think more broadly about where the industry is going. So it's been fun, but it is a fundamentally different way that I spend my time than a year ago.
Well, I've been working with CEOs and companies for 18 years, and I can tell you that one of the most difficult things that most have to do when they move into this role, if they've come up through the ranks, is taking that outward face seriously, right? That they have to be the face of the company, that they've got to be out, as you said, gathering new ideas. What was the catalyst? I mean, did you just wake up one day and say, holy cow, I'm a CEO, I've got to get out there?
No, I think I was pretty deliberate when I came into this role, at the encouragement of our board chair, but also talking to other CEOs that gave you some of their observations. I also attended a couple of consultative engagements that helped me just get through the initial assimilation, start to lay out a roadmap of what don't I know that I need to know and how do I go about that. I engaged in a high quality coaching engagement with someone within Bates, as you know. So I think I started off by realizing that this was a pretty big transition for me personally and for the company, and that I needed to take some deliberate steps to understand and build a roadmap of how I was going to make that transition. And so now, I think what I found is once you get it started, there's a whole bunch of other people that want to engage that way, and they haven't all figured out how to trigger it. So I think I've been somewhat of a catalyst for some other folks, particularly some new CEOs within the distribution and some other areas that said, hey, can we do this quarterly? Can we make a cadence out of this engagement?
Yeah. Tell me about a time when you made a mistake. Yeah, because a lot of people who, maybe work for you, or people just work in companies, they don't really understand what a long road it is to the chief executive's office, and how it wasn't always, paved with roses. So, can you think of a time when you made a mistake and what you learned from it?
Yeah, we're in the risk business fundamentally, and so there's plenty of opportunities over the last 3 decades to make some decisions that didn't work out perfectly. But I think the biggest mistake that I can reflect back on is really on the people side. I'm pretty developed in my opinions at times. I can be stubborn when I have a point of view, and while that needs to be, I need to become more open-minded, I also know that my intuitions sometimes are pretty good, and so I tend to lock on to things. And that comes in 2 basic forms. It comes down to maybe seeing people in a specific way and not always opening up your eyes to how they can evolve, or maybe what you're not seeing about their capabilities. But also this idea of realizing that it takes multiple perspectives to identify the problem before you try to solve it. And so when you're an underwriter and you're a business leader and you're paid to go solve the problem, that's your reflex. That's how you go about your business. And it really wasn't until the last 5 or 6 years in my last couple of roles that I realized that was stifling to some people, that they wanted the opportunity to show that they could develop and they could grow. But I, without knowing it, blocked some points of view that frankly could have been helpful solving some problems along the way.
We work with a lot of teams on problem solving, and one of the things that I've noticed is they're often solving the wrong problem. How do you avoid that here?
We have also had that experience, and you can get off track really fast if you're solving the wrong problem. And so it goes back to, I think, what I said earlier, is that we have a more deliberate approach at various levels of the company to put out the business strategy, to the tactics that we're going to use, but also our points of view on what's going to change and at what pace in the industry, and a better understanding of emerging trends within the business, and creating more of a collaborative view before that problem solving kicks in. And it takes time, and we don't always get it perfectly right, but I would say that our size and our culture and our operating cadence makes us better than average at that, because we have, I think, people that believe that that's critical, that it's not about really bright people that surround themselves with like-minded folks. It's about really having some inclusion and diversity in the ranks and encouraging people to kind of challenge the status quo.
You brought up change and disruption, and it certainly affects your industry. I know you were just at a conference talking about the kind of catastrophes that we've seen in recent years that were in many ways not imaginable 10 or 20 years ago. I wonder about what you think. One of the things that leaps to mind for me is autonomous cars, right? Driverless cars. But what are some of the trends that you're looking at that you think are really important?
Yeah, I think those that follow the property casualty insurance industry realize that it has been slow to change. Matter of fact, I started 32 years ago as a middle market underwriter, and while there's some new tools and some new, fancy computers that surround a middle market underwriter, the way in which they evaluate business is quite similar to the way it was when I started. That will not be true 10 years from now. That probably won't be true 5 years from now. So the pace of change will accelerate quite rapidly, and the innovation and the insurtech firms are surrounding this industry because they know it's ripe for change. What is temporarily slowing the pace of some of the change is how complicated and how regulated this business is. It's not like the taxi business where somebody can think of a software package that completely disrupts it and can get to work. This is something that you have to understand how to take risk. You have to understand how to price that risk, how to service the customers. But make no mistake, every aspect of our business will change pretty radically over the next 5 to 10 years. So we have built inside the company an innovation group, but also increasingly an innovation culture that allows us to do two basic things. Improve the way we do business today, better, faster, more customer-centric. And then on the other side, start to think about new business models. How could we fundamentally not just enhance the way we do it today, but do it very, very differently with new technologies, new data and analytics, being able to even look back at the processes today and figure out where the value is added and where it's not. So we're just getting started, but we actually engage with some of the outside insurtech firms. Increasingly, they're becoming enablers for change as opposed to disruptors because of the complexity of our business. But we have dedicated resources to make sure that we're thinking into the future and not just trying to iterate, from where we are.
Are the changes that you anticipate, and I know this is a big, broad umbrella or big tent, but are the changes that you anticipate going to be things that consumers like me notice, or is it mostly going to be internal to the industry?
I think it's going to be both. I think if you look at what's going to happen relatively fast, we should be able to do what we do today cheaper and faster. So the consumer ultimately should be able to see a more efficient insurance product. And I think there'll be a lot of pressure to create lower expense profiles because of these new tools that are available. But simultaneously, what we see is some real creativity on the full value chain of insurance, starting from how someone starts the process of even thinking about what they need or how they might go about it. And it's not just with the millennials, that's across the entire
all ages.
All ages, you can see it. But at every part of the value chain, what you see is people trying to figure out how do we fundamentally do it different, and what is it that the consumer is looking for, right? This whole concept of jobs to be done, and that starts with what is the consumer trying to accomplish, and how are we meeting that versus kind of selling our wares or showing them what value we can create for them. So as we go through that in a fairly deliberate way, we have some 20 pilots across that value chain that says, how do we provide the consumer with self-help tools? On claims, for example, what you're increasingly seeing is people being able to download an app, take photos or videos of their damaged property or car, and actually be able to settle a claim on the spot with an adjuster over the phone.
That sounds great.
Right? And
right. And everybody's carrying a phone, so everybody could do it that way. Yeah.
And it's hard to imagine that a great majority of the small property and auto accidents won't be almost completely done, and could even be automated in a lot of ways where it comes in and gets approved without a human being even involved. That said, there's still a lot of human engagement, and what I see a lot of these tools and capabilities doing is letting us focus on where that human intervention is really valuable.
Yeah, with AI, that's what everybody's talking about, isn't it? It's where does judgment come in and what can be automated. So it's going to be interesting, to see what happens in your industry.
Yeah, it's going to be transformational. There's no doubt about it. Yeah. But even as we study some of the bigger carriers that are in some of the direct-to-consumer parts of the business, what we see is this desire to talk to somebody before they take the next step. Maybe that will fade over time, but even in the biggest companies in the land that focus on private passenger auto, there's a great majority of the time they want to talk to somebody because of the complexity of this product. And so that trusted advisor and how you bring that into a more modern infrastructure and customer process is what everybody's trying to figure out. And it's exciting.
Yeah. So you've been in the seat for a year. What would Jack Roche today tell Jack Roche a year ago about what it's like to be Chief Executive Officer? What would you want him to know?
Well, I think first off, I say this job tends to be front-loaded, so thank God the first year is over. There's a lot of things that you need to do, some obligatory, but some just really important to establish new relationships, to get yourself, as we talked about, more external. But I would tell you that I'm pretty satisfied a year later that the steps that I took to be planful about the transition into this role, probably the best thing that I reflect back on is our senior team, which we call the partner group. That, I laid out a different way in which we would engage and ask for their participation in that, and they did their job. They kept me honest when I wasn't behaving the way I said we wanted to behave, so they helped me through that transition. But that's what I look forward to in year two, is really taking this concept of aggressive collaboration and real integrated thinking to the next level. And I just know a year later that it's even more valuable than I thought.
Mm. So last question, what advice do you have for other CEOs who might be, especially going through something like what you've been through, not just this past year, but the whole transformation journey you've been on? What kind of advice would you have for them?
Probably the biggest piece of advice is to make sure that you are grounded in your own authenticity. That trying to be somebody else, hopefully you're selected based on what you bring to the table. And the key to me is to look at, where are we trying to take the company? What do I personally bring to the table connected to that vision? And who do I need to surround myself with to fill out the team and to make sure that we can do what we're setting out to do? And that job never ends, especially in a dynamic business like ours. But it's important, and making sure that you're that deliberate about how you're going to operate, but also what's the team that surrounds you, and are you really have the skills and capabilities to take the company to the next level?
Jack Roche, CEO of The Hanover, thank you so much for sharing your story with our listeners today. Really appreciate it. Thank you.
Thank you, Suzanne. It was my pleasure.